Great
Hey,
to see you again, Cameron, my friend. What's going on? Skiing in
absolutely.
Japan makes me jealous, for sure. Everybody is jealous.
I know. No, it was great. We've been in Japan for a couple of weeks. And now I'm
Yeah.
back to Thailand. So it was massive contrast, cold, snow, and now back to probably the hottest time in Thailand.
Oh, for
For
sure.
the Thai New Year, it's, I don't know, it's going to be 30, 34, it'll probably go up to 36.
Wow. Yeah. Yeah.
But you were
Yeah. But anyway,
still in Colombia.
yeah, I'm Colombia. I'm in Medellin, Colombia. It's lovely here. I mean, it has its downsides as well. Everybody knows, but you have to take care and then you're fine. Sure. It's great. It's great. But it's not that hot. It's a little bit humid from time to times, and it rains mostly every day for a while. That's why everything is so green, like Medellin is like in between some mountains. Not really the Andes, and I'm not sure. I don't think these are the Andes, but it's like everything is right here. It's green mountain. It's great spot for hiking,
Oh,
but you have to take care of there as well. So yeah,
sure.
yeah, it's awesome. It's amazing. Food is great. I love the people, and if you go to the right areas, you're safe. If you go to the wrong ones, of course, you're not. Or at least the stuff you own, it's not really that safe anymore. Then it belongs to someone else. But it's literally everywhere in the world, even in Asia, right? So if you go to the wrong neighborhood, you get parted from the stuff very easily.
Sure, sure,
Right.
sure. But there's a lot going on in the markets.
Yeah, it is.
What's,
Markets are going up, right? Like
what's your
crazy.
thoughts? Okay, we've got war in Ukraine,
Well,
we've got inflation, we've got banking crisis
yeah,
with
for
regional
sure.
banks, even Credit Swiss
Yeah,
going under.
yeah. See, my thoughts here are like, people are always wondering, me included. I'm national economist. I studied that shit.
Mhm.
So I know everything about all the theories, starting from Keynes, going over to the monetarists, everything. I know all the theory. And when I look at the markets and also, of course, today's politics, it's more or less the same. Everything is totally different because, from theory, okay, now we have economic crisis, we have war, we have banks going down, okay, we're recession talking, we have, interest still hiking, everything's going up, inflation. So the world needs to, well, it needs to cool down, literally. And then you look at the markets and feel like, there's some heat coming in already, So how does it fit? And from my point of view, it's like, and you know it yourself, it's like we're handling the future. And now it's like people are looking forward for a brighter and better future after all this. So stock trading and markets are all about futures. And this is the future, not futures like a product, but the
Yeah.
future itself. So what I feel like, and if you look at the markets right now, is that everything that everybody says, okay, what else can happen? We know everything now. But what we are sure about is that it will continue to move on like it always did. So the world will turn again and move on. So everything will be better one day. And now the speculation goes into that way. That's what I feel like. What do you think?
Yeah, well, look, I mean, for sure. As you said, look, the market is a future pricing index. It's not pricing what's going on today, it's pricing what's going on in 6 months, in 1 year.
Yeah.
Uh,
Yeah.
the market, for me, I'm a seasonal guy, so seasonality is great at the moment. We're in the best
Yeah.
time of the market.
Yeah.
Market historically goes up in this period. Then we've had a little bit of a blip with the banks, but they've come out and gone, hey, we're going to backstop all the banks. And if there's any problems with the banks, don't worry, your money's safe. So really, to be honest, I feel we're going up. I don't see big negative slant. Inflation's been going down. And then of course, we're on a big day today. It's FOMC statement. And
for sure.
rates, and nobody knows what's going to happen. But if we look at we could look at the chart, maybe we'll look at it in a minute, but at the moment, the market's only going up. So
market's going up. If we look at Forex right now, Euro is going up against the dollar still. And this is surprising me because, well, it's not really that surprising. It's also pretty cool if you look at the charts.
So you wait 2 seconds, but I have let me share my screen.
So open my trading view, which offers everything, because I use it also for for public analysis and for some public videos.
So you were just talking about euro dollar, so I've got it on this. I think I've got it here. So
yeah, you have CFDs here coming in. Yeah, nice. Euro dollar.
Okay. So maybe we put it to like a 4-hour chart.
Yeah, I love it. It looks like mine. You have the Bollinger Bands.
There we go. Yeah.
What is the other one down there?
This is a 2-line MACD. And
I see.
This is something that a friend of mine was this is completely new to anyone that knows me, but a friend of mine that was teaching me. So we've got a fast and we've got a slow MACD.
All right.
And if you have a situation like this where we're above the zero and we put a little V right on the slow, the fast comes to the slow here, it's quite a good sign that this is going to move higher. So,
that's a nice confirmation.
Yeah, boom, it moves higher. So that's quite nice. It's quite it's a nice confirmation. I mean, I guess I'm just really giving you the very short story of it, but yeah, that's what that is. Nice. So as you say, look, the euro's going higher. So you were talking about that.
Yeah, so euro's going higher, and now the question is this obvious or not? So yes and no. So of course, people are speculating about the future, and the future right now is that everybody feels like, okay, the Fed cannot continue this road anymore. So maybe they go up to 5%, but I'm not sure. I'm pretty sure most market participants aren't sure about this as well, for a simple reason. We have 2 banks right now being collapsed. Like we have the Silicon Valley Bank and Credit Suisse. Why have they collapsed? So of course, all the bonds they were holding became more and more worthless, right? So that's basically the point. And because of that, everybody was feeling like, okay, now things are worthless, getting more and more worthless, because they see the interest rates hike, but the bonds they have interest rates about, I don't know, 0.5, 1.0, whatever, at least less than what they could get now. So of course they have to devaluate. And this is the problem why banks collapsed. One of them, I mean, don't talk about risk management in this way, but this is one of the things. And so what does this mean? It means that the Fed now cannot go further than they are right now, because if they do so, they would fire everything up, right? So this means that if they continue to raise the interest rates, we will have a bank crisis never seen before. Correct. So this is what we see on this chart right now. That's why the dollar is down and the euro is up, because now people are going to equalize interest rates again between euro and the dollar. I mean, we're with euro, I think it's 3.5 or something like that. I don't know that much. I'm not into this, but all I see is charts, and so they're just equalizing in the difference, and that's what happens now. And this is what markets always do. They're just adjusting what needs to be adjusted. And this is what happens now. If you go to the weekly chart, you see it very, very obviously, by the way. I know as a day trader, we never look at it, but for analysts...
I look at the weekly chart once a week. So,
yeah, that's what it's for, right?
Yeah, just to see what's going on. And okay,
so what do we see?
Yeah, trend has changed.
Yeah, it's so obvious. That's why I love the Bollinger Bands, by the way.
Yeah.
And the candlesticks. So if you really take it, if you do it a little bit more bigger, so that we have like really the latest. Yeah, I mean, look at this. Look at this. It's beautiful. It's simply beautiful. Why? First of all, and that's how I use the Bollinger Bands, by the way. You see prices going up since when was it?
Since October,
Yeah,
end of September. So end of September, pretty much like the markets.
Exactly, and nobody wanted to believe as well. And then look at this market timing. What is market timing about? Market timing is about to see the right signal right now. So when did it stop? With a shooting star. You see it here. The shooting star. It's in the week of the end of January, 30th of January. There's a shooting star. Done.
Yeah.
Period. Done. Where does the correction end? It's a simple moving average 20, middle of the Bollinger Bands. This means this is back to, well, some kind of equalization, right? So this is more or less, okay, this is your average. You're done. This is a fair price. And now it bounces back. And you can see this. You don't need to see any of the bad decisions, news, or whatever. All you need to do is look at the chart and see what happens right in the chart on a weekly basis. These are the big moves, by the way. And then you can go intraday if you're like, okay, let's see where I get some opportunities on an intraday basis.
Yeah, 100%.
What do you think about it?
Yeah, no, I totally agree. This is it. I mean, I think we said this before, that look, no matter what the news is, it all gets translated to the chart. And then we look for the opportunity. So, trade what we see, and that news, don't interpretate the news and think it's going to do this. Just see what's happening on the chart, and there it is. As you say, look, it's broken the trend. It's come up. It's come back to that's a 21 moving average, and by all accounts, it looks like it's going to go higher.
Yeah, it looks like. I mean, now we have a natural target. It's around 110, something around that. It's natural.
Yeah. Just back up to the highs.
So, and then we can talk again, and we will discuss. Okay, will we break the 110 up to what will be next? Maybe, pretty natural. Then is 111.80, 112, something around that.
Yeah.
Because this is what comes from resistance and support zones, and this is where prices might end up. But again, I'm not really convinced about the euro, but obviously the market isn't convinced about the US dollar as well. So this is what we see then.
Yeah, and look, it's had a massive fall, huge fall. So it's coming back.
Yeah.
So what about the NASDAQ? So
I love the NASDAQ.
Yeah, I love the NASDAQ too. It's been very, very nice to me recently. So let's have a look.
We have 5 minutes. Oh, the weekly again.
Well, we just have a look at the weekly, because we had a look at the weekly again. I think you can see here a very, well, not so similar, but similar-ish pattern. We came to these lows in October, moved up. We probably had about a 78% retrace, but look at those candles there. Beautiful candles. And then it's moved up. And now, look, if we start breaking 12,900.
True. And again, if you look at the candlesticks, what else do you need? Yes, of course, you can use this indicator of some kind of indicator oscillator, so whatever you like, for a little bit filtering and confirmation. But at the end, look at the candlestick. At a support zone, they're forming up buying signals. Done. Job done. You don't need any other stuff. It's just more like for your ego to make sure that okay, I have this filter, I have this filter, I have this. I cannot be wrong. Of course you can. That's why we have risk management.
100%. So let's have a look at today. What's going on?
Yeah.
So you haven't been trading for the last couple of weeks because of travel and so on. Last week, couple of weeks, I have been minimally trading while skiing.
Yeah.
Do you know when I minimally trade, I make more money? You know, when I travel and I really have really no time, I normally make more money. That's the normal thing. Although I was in the mountains, I just thought, look, I'm going to relax a little bit, and I'm not going to force anything too much.
But seriously, think about that. Why is that?
Yeah. Well,
you know what? Why?
Well, you're just not, you're not there. You're just like, okay, if I've only got this amount of time to trade, because the way I thought about it was, look, my time in the mountains isn't coming back soon, but my time in front of the screen is pretty much every day. So let me enjoy here in the mountains, and particularly with my son. You know, it's a unique opportunity to ski with him while he still wants to ski with me. You know, so then you look, or then I looked at going, okay, what are the trades I cannot miss? What are the levels I really just can't miss those trades? And you look at those levels, you set alerts, and that's it. Whereas otherwise, you know, you'll maybe take lesser trades. Not to say those lesser trades are not good, but you'll take those. But I don't know, over the years, and even my trading partner Mark, often when we travel, we kind of laugh because we normally make more money.
It's exactly like this. And for me, I feel the same. Traveling, and this is pretty interesting. I met the original trader, like the wandering trader right here in Medellin, Marcelo. He's a great guy, by the way. So we were talking about this, and he started like, I don't know, 29, something like this, 2010. I'm not so sure, but I'm pretty sure he's one of the first ones, you know, combining traveling and trading. And of course, he enjoyed like traveling, like we do, and it's the same for me. So we go somewhere, I go somewhere, and you know, then I have always to make a decision. Do I take care of business? Do I do trading? Do I do, you know, some excursions and explore the city or the area I'm in? And guess what? I have to take care of business with all the emails, meetings, all the other stuff. Okay, fair enough. I like to explore and, you know, get to know the city and do things like tourists like just do. That's why I go there. So what is next is trading. So I reduce trading time to the minimum. That means I just take, like, let's say 1 or 2 trades a day if I trade that day, and then I'm done. And that's also the point. It's more successful.
Yeah.
Why? Because you don't screw it up anymore. So it's just like, okay, you're doing just 1 or 2 trades, and there are times which are more volatile, where you have good opportunities. We see them on the chart as well. And there are times where you have opportunities, but they're not good. But these are the times where I'm not in front of the screen anymore. I think it's more or less the same with you. Then you're in the mountains already skiing, where everybody is just, you know, negotiating about the last point. You're not into this.
Yeah, absolutely. Or it's the time zone. It was like 5 p.m. So we're off the slopes, but it's like, okay, look, I'll trade something if it's really, really worth trading. You know, and maybe
because you have better things to do. And I'm very, very sure that this applies to the most of us. People sit too many hours, too long in front of the screen.
I totally agree. And you know, our main trades are like market function trades. You know, first of the month. You know, next week we've got end of the quarter. The beauty of these types of trades is we know exactly when they're going to set up, what day and what time. So you just kind of, okay, this time every month or every quarter or every week, I've got to be in front of the screen, but for a limited amount of time. And also they're really high probability trades. So it's perfect.
Yeah. So, and that's what people really have to understand. It's not about, well, you know, going hunting for opportunities for hours, because there will be a lot of opportunities, but not the right ones. but a lot of bad opportunities, which figure out to be, if you're lucky, like 1-to-1 risk-reward ratio, but that's basically it, you know. We want to have some huge ones. And look at the chart right now, what we can see here, like at, well, what is this, 8:15? Yeah, it should be 8:15. You have this nice, beautiful bullish engulfing at the middle of the Bollinger Bands. What else do you need to know?
Yes, exactly. This is for sure signal moving up. And if I look here, got my other screen, we had a nice pullback towards the close as well. So the closing price was 43,743 here. So, oh, put it in black. Yeah. So when you see like that, as you say, the market's just gone up, pulled back, tagged your 20 average, moved back above the previous day's close, and now the only thing for me is I had a key level here at 800 that I thought would react. Okay, it has, but if we can get beyond there, I think certainly 13,000 on the cards, and what we saw on the weekly chart was 13,500.
Yeah. Now, and this is let's agree on the bullish engulfing as an entry. Now let's talk management. So what my type of trading would be, okay, we have an uptrend, check.
Yep.
It has a correction, check. Pullback, okay, check. We have the reversal of the pullback with the bullish engulfing, check. It sits on the simple moving average 20, check.
Yes.
And it got confirmed the next 5 minutes. So next period it got confirmed. So it got stopped in check. So you're in a long trade and you have literally you have 5 confirmations about this. So 5 reasons to enter the trade. So what I feel like, okay, how can you manage this? Because you just go into the open and then you see like, okay, you have a lot of momentum, a lot of volatility going in. Of course, you get shaken through, right? But now look at the candlesticks. I would exit either with profit target, which would be the round number, like 12,800.
Yes.
Yeah. So this would be the natural one, or like underneath the candles. So you see the red candle here, why not taking stop loss in and you just give away like 11 points or something like that from the target. So this is your, you know, like your safety. And then it got stopped out. But imagine it's like you're entering at 7, let's say 7:55, and you exit at 7:85 maybe. So you have 20 points.
For sure, a little front.
Times 20, done, right? $400 in 15 minutes or 10.
Cool.
Not that bad.
So let's walk it through for the guys, because we talked that through really quickly. So our confidence is the trend, and the trend we can say for many reasons is we've got higher highs and higher lows. We can see here, swing high, swing high, swing high. Everything's
nice pullback, nice flag. Yeah.
We get above the moving average 21. We get above the close. We get a pullback to the 21, and then we're taking a break here. So we're in at 55. So Wieland, where's your stop going to be? Below this candle here.
Yeah.
So 55, we'll put it below here. So it's going to be 32, so maybe 30. So we've got 25 points of risk. And 55, and we're talking about coming out at 85. It's perfect, like a front run of 800.
Yeah.
Perfect.
It's interesting. You put some elements into this, like this 55, which is really interesting. Where does it come from?
For me, 55, it would be, because if we look at the high of the candle is 53. I want to see a 2-point break.
Ah, okay. Oh, yeah. Okay. The exact numbers. Okay, got it.
Yeah,
2-point break. So it's like
I want to see a 2-point break, and I want to have at least 2 points below this candle here, because it's below there.
I love that.
We could have a safety stop. Something else that I might do is I often like to just draw a trend line off the first two swings. So there's one swing, there's two swings. So it may be, you know, if you want to, if you've got a lot of room, you're maybe taking a wider trade, maybe we could put it right below here because it's below the Bollinger Bands and so on. But for a quick trade, then this is a beautiful stop, and we can see how the market's really pushing.
Oh, that's interesting. Oh, I love it. I love the idea because it's the same what I told people. That's a market proof to use it. Market is serious about the moves. This means like giving a little bit more room, 2 points, so you have a spread and an extra point on 2 points. So this is very, very important. It's the same as when it comes to the stop loss. But when it comes to stop loss, I'm very aggressive. I realize it now, and I realize it every time when I talk with people. My stop loss sits right underneath the formation, underneath the bullish engulfing pattern, which is something around 730.
Yeah. 730, as we said. And then you're getting confirmation to get also something that I'm sure you use as well is like, if this candle is closing within 25% of the high, right?
Yeah.
I think is Larry Williams, right? His one. And again, look at this candle closing right up at the top. And again, something else what I was thinking about here of like, you know, if we were just exiting on price action, then, you know, we've come outside the Bollinger Band, we're extended.
Yes.
Then we've come back in. So any break of this 82, you're out. That's it. You know,
exactly
that,
for that reason.
That move is done. That move is completed. Done.
Yeah.
And then, okay, sure, you might get another opportunity as it comes back again to go long again.
We have it right now coming in. See this? Well, because what I like to add is a simple moving average 10. Just put it in and see the magic.
Sure. Let's see indicators. Moving average
8, 9, 10. It doesn't make that difference, but you see what happens at the 10. You see the hammer. So you have a really, really nice pullback, and now the rally comes back again.
Wait, 2 seconds. Here we go. Okay, it's in yellow, but we can't see its source. Maybe I do red.
Yeah.
Red. Okay.
Yeah, colors. Yeah, see that?
Okay, so
beautiful, right? So this is some kind of momentum line for me. And you see also how the price sticks in the morning hours, like, you know, pre-trading.
Yes.
Like 730, something around. It's the price just sticks between the average 10 and the Bollinger Band. It's just, you know, like really tight. And this is for me, it indicates that there's nothing really good to trade. It just, you know, just moves sideways and negotiating really, really hard. And you see with the candles, green, red, green, red, green, red. So there's nothing to gain here.
Yeah.
But coming back to them, yeah. And now I'm really curious about what happens with that hammer at the 10.
Absolutely. So it's so I guess also maybe to add for the guys as well, it's like, you know, the best pullbacks for me are going to be to the 21 normally, but where you have something like this where we've seen a big breakout, you may not get the ideal. So moving back to something like a 9 in an aggressive move up can be
and it's not that aggressive at all, because just with a quick glance on it, you just see that the pullback already went down to around 50%, which is perfectly fine. It could be high momentum if you go like 24 or 38, like 1/3 around that. Then you have like, okay, they cannot wait to buy in, you know. I want to have it now anyway. Give me, you know, things like that. And if it goes to the 20, you're already talking about 2/3, which would be, you know, 61.8.
Yes.
From Fibonacci ratios. Yeah. So this would be already right now questioning the big move we see here, from my point of view. And it would be very cautious of entering this.
So do you use Fibonacci retracement?
Yes and no. I think it's a good idea to see on the screen, on the chart, how much is the correction and the pullback really going. For me, it's like if it's around 1/3, we are talking about strong movement, because the psychology behind it is that people cannot wait. They want to have it now, you know? They don't wait until the price drops a little bit further. They want to have it now. So this is strong momentum. It's a strong trend, strong move. This is what happens everything around this 30% area. And if you have 50%, it's quite normal. And it's fair enough to say, usually this offers good opportunities, because then you have, if you enter there, like with this hammer, one natural target will be the first stop. And if you enter there, you have already risk reward ratio 1:1 if you exit with a stop loss underneath the hammer, right? So this is something I really look for, but I don't draw this in the chart, because you can see it. And if you see that people wait for re-entering the market for, like, let's say around 2/3 of the first move, then you know that they are already hesitating of entering the market, right?
Yeah.
So they're already hesitating. So that's the idea.
Yeah, for sure, for sure. And you can see it. And 50%, it's very, for the DAX, it's really normal for the DAX to it's almost like clockwork. The DAX just pulls back 50%, and then it normally goes.
What I also like, maybe we have the same price indication. Let's see. So we have the high of the hammer here with 12,784. Let's say 85.
Yeah.
As say 785. The next one has its high 785. The next one has its high at 785 rounded. So if you use that, you know, that rule where you have, okay, 2 points, market has to prove. And then I get stopped in. Right now, there's no trade running at all, and it's good. Yeah. Because if you see it in chart,
yes, yeah,
market is not so sure right now. So use stop buy.
Yes, exactly. So using some kind of break of some confirmation that we're getting. This hammer is really, truly showing momentum, which actually at the moment is. We have doji, and then we have a down count. So the markets, as you say, we're thinking about it now.
Yeah.
But we're not breaching the low. So, you know, and we haven't broken also. Is interesting to note here. Something else that you can kind of look at is that from this high, we've never broken any candle up yet.
Yes.
Which seems to, in that story, say, hey, we're still in a retracement. We haven't taken a break of any high yet. Although there's three at the same level. Yeah.
I mean, this has two indications. One is market is not so sure, but they don't want to give it up right now. And depending on the candle, which is like operating right now, these 5 minutes, if we have something like a hammer again, I would consider it strong, because sellers are still there, but they are not that confident. If it is something like not a hammer, like a red candle having a bigger body, I would consider this one as being, you know, not valid anymore.
Yeah.
That idea.
Great.
Because people are not sure about what to do.
Yeah.
But right now, let's see.
This is all where we are with time. So
yeah, a couple of seconds. And this is really exciting. It's not exciting being in the trade. It's exciting about what are people doing? You know, what is this crazy bunch of traders doing here? Are they kidding me?
Yeah, and at the end of the day, this is right ahead of a massive news announcement as well. So it's interesting. Even the last Fed day, the market's just going up and up and up and up and up and up.
Yeah. But I mean, that's trading. You just sit there, you have a signal, and you just wait. You wait until the market decides to put you into the good trade or to fool you, you know? Get fooled in, get fooled out. So this is the worst thing that can happen, you know, like if you have higher high and higher low afterwards, you get fooled in, fooled out, and then you see like, oh my, I have a loss.
Yeah.
For nothing, you know. So let's see.
Yeah, it's patience. It's looking for the perfect setup.
Maybe, brother, we should do this live.
Yeah, this
Maybe
is,
right now
I was just thinking the same thing. Why don't we maybe do a live session, maybe at the Open, or maybe like half an hour after the Open, just to let it settle down.
Yeah, you know, something like this. It's not about live trading. It's a little bit chit chat about life and trading and traveling and so on. And I will definitely, I love that. But it turns out, and now it's the third time we are together doing this. It turns out we just do this while looking at the market, having some insights, some comments, some ideas. Some might turn out right, some might turn out wrong, but this is what life is. And I'm pretty sure that why not? We should give it a try.
Yeah, 100%. I'm more than happy to. I mean, this is what we do every day. Look and internally think about, okay, what's going on here. So it's good, and I think it's also helpful for people to maybe get a couple of opinions. Of how
so right now, with that move, with that candle, I would be very, very suspicious, and I would not touch this anymore. Now I would wait to the pullback to the 20.
I agree.
Because you have some kind of support zone over there, and this is most likely to happen now.
Yeah.
If it turns green now, it's more, for me, it's more like something that moves sideways, not really serious about the next move. So that's not my trade anymore.
Yeah.
Because momentum is gone. It's gone right now.
Because this is the candle that shows momentum. We want to see this break quickly and move up, at least up to the highs, if not beyond. Yeah. But now, actually now, do you know what I'd like to happen? Is it breaks up, false break up, pulls everybody in. They're going to put their stop here. And then what I like to see is so it goes for a first entry. Then it will come back, break the lows into the 21, stop all the early people out. And then
you get fooled. You get fooled in and fooled out, you know? And then it reverses on the 20, or what you use 21. Why do you use 21, by the way? Does John know? You can tell him. He will be in Jakarta as well, I think.
21 I've used for years. 34 and 21 I used for years. Now, normally I use 9 and 21. That's what I use.
Yeah. So I have 20 and 10. So,
so we're,
that's what it is. But it doesn't make that difference.
No, not so much. But at the end of the day, it's kind of the mid-ball on Japan line. And then some on my other chart setup, I have a 169, which is your very medium-term trend. So it's really like a 200. It's like a 200 moving average, but for a long time, I've used a 169.
Nice.
And you get into these habits, and you just go, okay, well, it sits there, and that's what your dashboard looks like. And that's the thing. I mean, that's the key point, right? Is that we talk about these things. These are little dials on a dashboard. It doesn't mean that one dial is everything. No. It's just something. I always say you can't drive a car using a speedometer,
That's true.
That's the only thing you've got to look at is the speedometer, you're going to crash the car. So
definitely that's it.
There's so many things that, we're looking at the candlesticks, we're looking at the average.
The price holds it down, see that? Now it's moving down. Yeah. So the only thing looking at this chart is if you see the last big candle, still it holds, Everything happened after that is inside of this candle.
Yes, everything's inside, pretty much.
If you put everything together right now, you have a giant shooting star.
Mm. Well, let's do it. Let's go up to 15 and just see what it's saying.
Yeah. So I think the support zone is quite natural right now. Very obvious, right? This is where the 10 comes into play. You have about 50% pullback. Quite reasonable.
It's even looking on 15, that's a big move. You'd
Yeah.
expect it to come back and think about this a little bit. Which is,
But see, that's always a situation with at the opening. You have such big moves, and then everybody has to sort himself out and see, okay, what I'm doing now. And you have such a huge candle on the 15, also on the 5, or maybe 10. And then everything is, okay, let's see where we go now, what to do now. I mean, today is Fed day as well. I'm pretty sure that was basically the move for today until the Fed decision comes. So then everything goes crazy again. But yeah, still it's a huge move. And it also shows that market participants are more confident about a positive decision of the Fed than a negative for the market, of course, positive or negative.
I think so. And that's what we saw last time. We saw it rallying. And then what you normally see is you see a big move, big spike down, fill all the orders, and then it goes up.
Yeah, that's naturally. I mean, this is what happens all the time. That's why people, don't trade the news.
Yeah.
Don't do it. Just wait what happens, because whatever you do, you're wrong, right? Because it moves up like crazy, moves down like crazy. Everybody got stopped in and out, and you do a lot of damage to your account without any reason.
100%.
Been there, done that, right?
Yeah. And I think even we were talking about this last time on the Fed, it was just screaming on up after the Fed. And I was saying to my guys, hey, don't get FOMO, don't jump in. It'll come back. You know where it came back to? It came back all the way back to the news level, and which was kind of support, and then we bought it there and away we went. I think we discussed that one last time. But yeah, it's a game of a little bit of patience and then just knowing when to walk away, right?
Yeah, but for what do you get paid as a trader? For clicking on the mouse? Is that what you get paid for? Of course not. You get paid for exactly that patience. And of course, that knowledge you have of when and how to enter and how to manage the trade. This is what you get paid for. But you also get paid for the patience, for the discipline.
Well, you get paid for good ideas, right? The discipline to execute good ideas. And I think this is certainly where people struggle with what I see is that, if you think of yourself in a job mentality of getting paid by the hour or getting a salary, our thing is you get up, you prepare everything to go to work. It's almost like preparing to go to work, and you get to work and you go to one meeting and you realize there's nothing to do and you have to go home. Whereas this is totally counterintuitive to people. They feel, no, I need to do something to make money. Whereas in trading, a lot of the time you need to do nothing.
Right.
Because it works.
Now, let's talk about this management-wise. I mean, in a situation like this, so you're sitting here waiting for a trade for, let's say,
it's 20 minutes.
30 minutes already. Yeah, almost 30 minutes. So, boom, here we go.
Yeah.
See, that's a break. And that's why you use not just stop loss, but also stop entry for that reason. So, okay, question now is, actually it's gone, but just imagine nothing would happen. So would you sit in a situation like this and wait, or would you say, okay, I'm done for the day, I did my trade, see you tomorrow?
I mean, it depends what levels. It depends what. Normally, my plan is made pre the open, and then I'm going to look at how the market's playing out, where I want to buy. This was the level I wanted to sell, so guess what? That was a good sell level. That's played out. And if I've already taken a trade, done well, I'm kind of done. That's me. I'm not hunting other things, or I may be thinking, okay, look, if it does this later, let me set an alert and I'll come back to the screen, but I'm not going to sit and chase it. And, like a day like today, as you said, this is probably the move. And then we've got the Fed. People are going to wait for the Fed news. And certainly on a day like this, I personally am just going to go, okay, I'm going to let the news come out. And then well, because I'm mainly trading the DAX, I don't normally trade in the US session.
Exactly.
Guys, today, hey, let's just let the news come out and see where the cards lie, and we'll start again tomorrow from there. Why do we need to take any gambles today?
Yeah, I mean, if you look at the chart right now, so my answer to this question is pretty clear. For me, that one was it, because if you look at this candlestick now, it doesn't matter what it will be not a signal. Because, you know, you have high volatility in this, it's quite huge, you have a small body coming in. So it doesn't matter if the body is green now or if it's red, there is no reasonable trade coming from it, because risk reward ratio wise, there's nothing to get, right? No. And also the whole move we saw, it's denied almost already. It's almost denied, right? So what should I trade now? I should wait till the price comes up, let's say 12,800 again, the turns, maybe building something like a M, you know, like a double top. This could be interesting going short, or just wait until any decision will come somewhere around the middle of the Bollinger Bands, like the simple moving average 20, or something around that. But it doesn't look like this. So sitting here right now, for me, is a waste of time. As a trader, of course. Not talking with you, just to get it right.
Yeah, I was like, wow, he's gonna play me like that. Okay, no, absolutely. Yeah, there is no trading to be done today.
So there's nothing to do.
You say, okay, let me give you something from my side of where I feel this is completely gone. This move, so 3 soldiers, if you like, is the 78% retracement. That's it. It's done. That
True.
Everything that's gone on here. If we start really getting below that, then boom, it's gone. Not that we're looking to get into anything here, but yeah, just on the talking side.
Yeah, what you see is that the 50%.
So I took it.
We are, and that's also very interesting. The hammer, the first hammer we were discussing about, had its low exactly at the 50%.
Exactly. And then this is come to 60.
So, and if you're a little bit more experienced in watching the chart, you don't need to put this into with the Fibonacci. You say, okay, we're talking about around 30, around 50, around 60%, 2/3 of the move. And again, it's very, very healthy to stop at least at 50% and reverse. It's questionable at 60%. It's devastating at 70% and less, for a reason.
Yeah.
Because if you put everything together, you have a giant shooting star then, you know, questioning everything. Yeah.
Yeah. I mean, even if we came down here, we need to get back beyond the 21 for me. 2021 to even consider a long. So
yeah, and also, I mean, if you look at this situation right now, if we hadn't the upper shadow, it would be a perfect hammer, right? I would love it. And this is also how you see how the market screws sometimes everything, because you feel like this could be a great signal, but by definition, I have to enter at the top. It's not a hammer at all. It's like a doji spinning top, whatever. You know, so there's nothing. I cannot do this trade, even though I would say maybe this will be bullish engulfing and everything, but the distance between my entry point and the stop loss is way too long.
Yes.
Right. So market screwed it up.
Yeah. Well, it didn't screw it up. I think this is a really important point, though. Of
that trade, you know, that trade idea.
Is there a trade, but also even if you had a setup, so even what you could say here is, right, okay, so this was the hammer. Okay, maybe some people got long, it got taken out, now it's closed back above the 21. Now if you have a positive candle here, you could get long. But what you're saying, which I think is really important, is that sometimes a system trade sets up or a pattern sets up but it's still not enough. It's not ideal. You need to still look at, yes, that is a pattern. Could be taken if this was maybe a really nice strong candle. But from your standpoint, you're like, hey, look, the risk rewards to not enough. And I think that's so important of just, I see so many people just failing because they trade like a system pattern, but how to trade the nuances of that. What are the really, when does that pattern play out really well? And when does it not so much,
Yeah, true. Yeah. I mean, a lot of things to to look at in the chart, and right now it seems that not really it stabilizes, but a bit. And again, right now I feel like more it's moving sideways and being not that interesting for us as traders. And now we're talking again about time management, how to use your personal time. Want to really watch this, and also consider that having Fed today. Of course, it takes still a while until they have their meeting and everything gets, told and, published. But the more you sit and wait, the closer you come to that moment where literally nothing happens anymore. So why should you do this?
Yes, indeed. So what time are we now? We are. This is UK time, so it's coming out 6 o'clock UK. So we're just over 2.5 hours away. So maybe this may be it for a while. And then the cool thing, and I'm sure you do this, Will, is you just set some alerts. So we could just set an alert here for 800. Hey, if the market's getting beyond 800, I want to know about that. Even maybe it's not something you're going to trade, but once it's beyond there, for me, I'll be going to sleep at some point. And I want to know about some levels that have broken. I wake up in the morning, I see, okay, this level went, or that level went, and you can put some notes in and see what's going on.
Yeah, and then you have some ideas of, okay, what to do if the price breaks the upside. Okay, then we're obviously in an uptrend. What can you do with this information? So you look for more uptrends. So maybe you want to enter after the pullback and stuff like that. So it's the same story, different day, right?
Exactly. But the key thing is that you're just using your time well. You're not having to sit in front of the screen waiting for things to happen. Just get some alerts, and it's gonna let you know what's going on according to your own analysis, or buy levels. I mean, I often use them for levels that I want to look for, like very deep retracement, key levels from daily chart or whatever. I'll have a 50 point in front, and it will go. And, okay, maybe I need to go and have a look at this.
Yeah. So we see nothing is coming here. It's it's very, very quiet. Let's keep it this way. And again, the huge candle, up move, down move, it says, don't touch me. Right. That's all we need to know.
Yeah, and let the Fed get on with it, and then we'll go.
Yeah. All right.
So we've gone on again.